I am in total financial vulture mode right now, and I hope that you're with me. I hope that you are up in the sky with me as we circle around, we look down, and we see our prey continuing to get weaker and weaker and weaker before we just come on down and just cherry pick and take what we want at a very, very convenient way. And who are the prey? The consumers out there. And we just have hot off the press new data that suggests the US consumer continues to get very, very weak. And the rationale kind of makes me chuckle. It's like, okay, I don't know how you can use certain words in order to support this claim, and I'll get to all this. But the question I would, Clay, what are you doing with your money? What do you think is smart to do with your money? And right now I am hoarding cash. Why am I hoarding cash? Because I am waiting to, like a vulture, swoop down and start to pick the bones off of all these people that are continuing to not only show signs of weakness, but create more and more of a burden on themselves. And eventually things are gonna collapse. So I'm just one example. I'd love to pick up another Polaris side-by-side Ranger, but it's only a matter of time before these things flood the market and I can get an awesome price on those. And that's just one random thing, and that's not even really an investment. But from a real estate standpoint, I am waiting because things are coming my way. So hot off the press, like I said, household debt soars at fastest pace in 15 years as credit card use surges. And we have some very, very interesting things down here. The credit card balance, and I should note and want to point this out, we're talking balance, as in not credit card, not people that use credit cards to get the points and then pay them off. No, we're talking credit card debt, meaning a balance is being carried. Very, very important distinction. So this is not credit card usage like I would do it, or hopefully like you would do it, where you use it, you get the points, you get the cash back, whatever, the airline miles, and then you pay the thing off. That's not what we're talking about here. But you can see right there, credit card balances collectively rose more than 15% from the same period in 2021, the largest annual jump in more than 20 years. And then get this quote is savage. The increase towers over the last 18 years of data, a group of Fed researchers said in a blog post on the central bank site. So, okay, the context here, credit card balances are surging. They're towering over the other data, and things are really starting to get quite risky, quite, dare I say, a little shaky out there. Now, they do go on to say delinquency rates are rising. They remain low by historical standards and suggest consumers are managing their finances through the period of increasing prices. I do agree that they are managing their finances through this period, but how are they managing their finances? By putting everything on the credit card. So yes, right now delinquencies are historically low, but that's why myself and other financial vultures, we're still circling. We're still up in the air. But unlike the Fed or unlike whoever's writing this up, I'm not quite sure how they're not connecting the dots. Like, yeah, you can't say that people are not managing their finances because delinquencies are, sure, they're rising, but nothing crazy via historical standards. But why is nobody asking, well, how are they managing them? By using credit cards, by carrying balances, and which just compound the problem of even higher interest rates. And it's only a matter of time before these delinquencies just spin out of control, because at some point the finances are going to buckle the more and more credit card debt you take on. And when you have interest rates continuing to rise, that credit card debt is going to get more expensive. So a lot of information out there that suggests that if you are like me, let's just be patient. Let's continue to be patient, continue to hoard that cash, continue to wait, because there are going to be opportunities out there. I've been here before. I built a large part of my real estate portfolio back in 2008 and 10, at that range when real estate market crashed. Now, do I think it's going to get that bad again? Probably not. But do I think that there's going to be some opportunities where people that load up on debt things are going to buckle and they're just going to have to start to liquidate? Banks might have to start to liquidate some things, which for us that are hoarding cash can get some good deals. Yes, I believe that is certainly around the corner, because all I continue to see is not only debt increasing, and I'm not talking mortgage debt because that is understandable because mortgage rates are going up and a mortgage is tied to, some sort of physical asset. It's the credit card balances though. When that stuff goes up and when that stuff is being used to manage finances, that's really, really rough. And there was another part in the article that mentioned, things are robust because people still have savings. Are you sure they have savings? I'm not refuting that some people have savings, but is it these people that have savings? Because wouldn't logic dictate that you would use those savings before you decide to go and take on debt that is going to be, costing you 10 to 15% to carry because credit card interest rates are crazy. So yeah, people do have finances, but it's definitely not going to be these people. And that is how they're managing their finances, is through this credit card debt. So be patient. Join me up in the sky, circle. As you circle, continue to hoard that cash because there's going to be opportunity to finally swoop down and start to pick the bones of all those that have been making very, very stupid financial decisions by thinking, hey, debt is cheap. Let's just load up on debt. Well, things are starting to slowly deteriorate for them. So let me know in the comment section. Are you a financial vulture like me? Are you circling up there with me? If not, hey, join me. Join us. Hoard that cash and be ready. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.